Hello, and welcome to Dochnartien Investment. This analysis is for Booking Holdings as of June 20th, 2026, with a share price of $171.78. The full report is on donation.ca. One of the most profitable companies in all of travel has slipped to within a few percent of its 52-week low vol, and on our numbers, the market is now betting it will barely grow ever again. That gap between a genuinely great business and a beaten down price is exactly the kind of setup worth a serious look. So here's why Booking Holdings rates a buy today. So what are we actually looking at? Booking Holdings is the largest online travel company in the world, and it barely owns any of the travel itself. It runs an asset-light marketplace, connecting travelers with more than 3 million places to stay and taking a small cut of every booking. That's why a business this size still throws off around $9 billion of free cash a year at 34% operating margins. It's the toll booth, not the hotel. Here's why we rate the business so highly. It's a two-sided network. More properties pull in more travelers, which pulls in more properties. A flywheel that's genuinely hard to copy. Because it owns almost no hotels, the returns on the capital it actually uses are enormous. And management hands the cash back. It has retired roughly 7% of all its shares in just the last year, buying them in while the price sits near multi-year lows. The one honest caveat is the chart. The long-term trend is up, but the medium-term trend is still repairing, so this is a name to scale into, not to chase. But the real reason it's interesting today is the price. Strip out some accounting noise from its investments, and Booking trades around 16 times next year's earnings, the low end of its own 5-year range, and cheaper than a 34% margin compounder usually gets. Now run the math backwards from today's price. The market is only pricing in about 2 to 3% long-term growth. Analysts expect roughly 16. When expectations are set that low for a business still growing double digits, you don't need heroics for this to work. Now, what could break this? The biggest long-term threat isn't a rival travel site, it's Google. Booking is both Google's customer and its competitor, and if Google keeps pushing its own travel results, it quietly raises the cost of finding customers. Airbnb is chipping away at the fast-growing market for alternative stays. And with the Fed signaling higher rates for longer, discretionary travel budgets could tighten. None of these is flashing red today. But if Booking's cut of each booking starts to shrink, that's the thesis breaking, and our line in the sand is a close below about $149. So weigh it up. If the business simply keeps compounding and that cheap multiple drifts back toward normal, the base case is a gain of about 22% over the next year. If the newer advertising and connected trip businesses start to land, the upside runs past 50. And if the bears are right and competition bites, the downside is a fall of roughly 18% to a level we treat as our exit. Risking 18 to make 22 and potentially far more with a defined stop, that's a trade tilted in your favor. Putting it together, a wide moat, cash-rich market leader, trading near a 52-week low while expectations sit on the floor. That is why Booking Holdings rates a buy, best built as a position you scale into rather than chase. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Dochnartien Investment at donation.ca. The link to the full report is in the video notes below. Have a great day.